Hey, hello everyone. I hope you're all doing great on the 2nd of June 2025. My name is Marcello Kolax and I am the Managing Director here at Clever Markets. And today I'm walking you through the European energy markets and let's have a look at what happened. So first of all, we did have quite a few big moves towards the end of last week, which resolved a lot of the sideways ranges that we were experiencing for the longest time. Gas and power markets are now correcting lower, but we are already working with targets that will help us establish how low the market can actually go. But before we get started, of course, do be reminded that everything you see here is not real trading advice. Of course, it is just my humble opinions and of course not an invitation to trading. Okay, so one update first. Do join the 4-week Clever Markets Technical Analysis Academy starting on the 23rd of June. It is 4 weeks of intense technical analysis study. You do get one-on-one sessions with me, live tutorials, and we'll actually turn your trades into case studies. So what I will do is I'll not just teach you the basics of TA. So if you already have some basic TA course completed, then this is the perfect starting point for Clever Markets. You know all the tools, now we'll turn it into a methodology and I will help you build your own technical analysis methodology. All right, so we'll start with the TTF sentiment poll, and we see that from week on week we saw that last week we had bullish dominance, but the market itself was still moving sideways, but the bulls did come out on top. But what happened? The market broke lower. So this rising bullish confidence at the potential resistance level can sometimes lead to an inverse, so the pole can act as a contrarian indicator, not always, only in certain market environments. So this week we are a little bit more balanced again. Can you see the bears 40%, the bulls 40%, and then we have a few people on the sidelines. The departure of the bullish sentiment does make sense for me. Because look at that. So this is the TTF front month, the NBP front month, the TTF front season, the NBP front season. We do have German power, EUA's German power, Henry Hub and Brent. The gas markets are pushing lower and we are working with clear downside signals. So for all of them, I recommend to not stay on the daily chart. To anticipate the extent of the downtrend, I recommend zooming in onto the hourly chart, 15-minute chart to really see when the market is bottoming out. But I am still working with Fibonacci retracements on the daily chart. So I will show you how I do this in just a second. What's really interesting is that the EUAs did not pull through. So while gas and power to a degree are pointing lower, are correcting lower, EUA traders, they're not having any of this and they remain firmly within their range, remaining neutral. Okay, so let's have a look at the markets one after another. So we'll start with the TTF front month. So on the weekly chart we have adjusted quite a few bits. So we see that we are now working with these FIB retracements, right? And we see that we remain below the 23.6% FIB retracement, which is a very important resistance level on the weekly chart, 37.85. We have a bearish engulfing, which is setting us up for a decline, right? Volume, nothing crazy, but also not really that low. It is the end of the month, so this was like last week, right? So the volume is supposed to be a little bit lower maybe. So overall, this is a good bearish setup. Now, the bears would be confirmed below 33.825. because this would be below the bearish engulfing, and this would also show that the 23.6% FIB retracement has held. And then the bears will simply continue. If you really want to wait it out for a big momentum trade, a move below 31.2, this trough here would be then the big marker for bearish continuation. Now here's the thing, alternatively, if we push above 37.85, then the bullish upside correction on the weekly chart chart will continue. We could then make it to 42, maybe to 45.5 even. I think all of this seems reasonable, but only if we push above it. Now let's have a look here. So the momentum, as shown on the MACD, has declined significantly. We're well below zero, so there's nothing bullish in sight. We also see that the 8 and 12 exponential moving averages are fairly bearish, and there's no bullish indication from the stochastic. Yeah, okay, maybe we got a little bit here a couple of weeks ago when we actually did correct higher, but a full-on bullish signal would only be given if we push above 20, above the oversold territory. And combining the actual price action with the tools is something that you will learn in the Clever Markets Technical Analysis Academy, because you can't use all tools at all times essentially. So look at this, we are working with FIB retracements now on the daily chart, a big part of the TA Academy as well. We put the 0 down here, 31.2, the 100 up there, 37.94, and we are now correcting lower. So I'll just show you, I'll just put on the old FIBs here. If we get, so this is for like all FIBs, yeah. If we remain above the 23.6% FIB retracement, in our case 36.34, here, right, then it is just noise and we are not really dealing with a down leg at all. And you can see for the longest time we remained above here because the market is seeing it as exactly the same way that we did. But once the market pushed below the 23.6% FIB retracement, we can actually speak of a downside correction. And these downside corrections usually tend to go to the 61.8% FIB retracement. So in our case, 33.77. Now, if we find support here, and we did have some good volume at the last session of the last month, then we could reapproach the 37.94, this old peak here. By the way, if we push higher, then we would also remove the FIB retracement levels again, right? And then all of this would just have been a corrective move in an underlying uptrend, right? But please be aware, the weekly chart is showing us that, yeah, maybe a little bit more losses are likely, so be wary. Yeah? So this here is best traded on the hourly charts, both the down leg and the upside correction. So you can profit from that on the hourly chart, at least on the spec side. And only above here would I resume like a full-on bullish view also for the daily chart. If you're more on the physical side, start looking at the hourly chart to see how much lower we can go. Maybe there's something even better to be had here in terms of locking in cheap volume. And here once again, a move below 33.825 this morning on Monday morning could lead towards 32.5. All right, the market might bounce somewhere soon, but where? Well, let's have a look on the daily chart. The market could bounce in the 33 area, so like somewhere here maybe. So do keep an eye on this as well. So once again, I am like super sensitive for a bullish bounce, but I use the hourly chart to actually see once we are no longer making a flow of lower lows and lower highs, and maybe at some point this gives way to a flow of higher highs and higher lows. So right now I see that on the hourly chart, fairly bearish. The momentum is like strongly aligned with the bears. There is no indication of a bullish upside correction. The DMI is strongly bearish as well, as are the moving averages here. So how do we put all this together? So multi-time frame analysis usually has big positive results for most traders, both on the speculative as well as on the physical side, which is also covered in the TA Academy, of course. So what I do now is I keep an eye on the hourly chart. I see, okay, how much lower can it go? I know it's not going to go any lower if the momentum and also the price starts bottoming out. This would then give me an idea of how low the daily chart can correct lower. And this could then be at some point either a bullish, so a buying signal once we identify the trough on the hourly chart, or if like nothing happens, we probably would be aiming for like 31.2 if we break below 33.77. You can see here that I am not trying to predict the markets. I only see bullish momentum has topped out on the daily chart. The bears are in charge on the daily chart as well. The 8 and 12 exponential moving average we are about to get a bearish crossover here. So there is a chance for us for this whole thing to continue lower, essentially. But we are not certain yet. And for now, I remain a little bit optimistic. Overall, the market is, to me, neutral. So let's have a look at this. Then, of course, we know, like, in the grand scheme of things, even if we correct higher, this might be just an extended upside correction until we eventually move lower. So simply with this knowledge, so this knowledge is not a trading strategy, right? But this knowledge will help you inform your trading patterns, hopefully for this week and beyond. Because now we know what to look out for, where the support and resistance levels are, what we do when we bounce and when we don't bounce, and then how it all fits into the broad picture. So, and around that, with of course best systematic trading practices, you can build your own trading methodology around that, which is something that we help in the TA Academy.